the number one thing to focus on for your deferred sales trust transaction part 2. Hi, I'm Brett Swartz, founder of Capital Gains Tax Solutions, and we're here to help you clarify the deferred sales trust to see if it's a good fit for you. And more importantly, really dive down if you're in the process of selling right now, or you're very close to selling, you're 10 days away, you're 15 days away, you're 30, you're a couple months away. It really doesn't matter. But each stage of this process, you want to make sure you focus like a laser so that you feel 100% comfortable, confident, and you're ready to go when your sale happens to defer all of that capital gains tax. And so in part 1 of our series, which is the previous video, we focus on all things timing and all things motivation, right? So if you haven't watched that video, I highly encourage you to go back and start there. And but real quick, timing is of the essence. You want to make sure you're classifying the transaction in the proper place, whether it's an investment property or everything else, which doesn't qualify for a 1031 exchange. We need to have all of the things set up prior to closing. Okay. Also motivation, clarifying what exactly are you trying to solve? In fact, why are you selling in the first place, right? And is there another alternative you might do, like a refinance instead of selling, or what's the outcome going to be for you for when you sell? Are you looking to sell cryptocurrency high and invest in real estate? You're looking to exit your highly appreciated business and go buy some real estate? Are you looking to diversify from your highly appreciated public stock, maybe move it outside of your taxable estate to save the 40% there? If you're looking to defer or delay some of the income tax that's coming off your highly appreciated assets, are you looking to get a brand new depreciation schedule? These are all the questions you should be asking and clarifying, and then determining what strategy is going to help you accomplish your goals. Okay, so that is video 1. Okay, so now video 2, we're talking about all things legal. Okay, so before you go to any tax deferral strategy or go forward with anything that's brand new to you, you want to make sure that it's 100% legal and it's been tested and tried by the IRS, and you've looked through it, especially when it pertains to tax and it pertains to your wealth. Okay, and so the goal of this video now, if you've already clarified step 1, is to clarify step 2. You want to use all of the emotional part of, deferring tax is a lot of fun, but now we want to get very specific, and we want to get very evidence-based understanding of the track record, which starts with a few questions that you should be asking myself, the DST tax attorneys, my business partners that I work with, or anything else that you're looking out there for different strategies. And question number 1 is, how long has this been around, right? How long have you been doing this? And the answer is the deferred sales trust has been used for over 25 years. The second question should be, well, how long? What's the tax code that it's tied to, and how long has that been around? The tax code is IRC 453 for transactions that are typically 5 or 10 million and below, and then we use something else for transactions that are larger than that. And that tax law goes back essentially to the 1920s. Okay, so it's tried and true. It's known as an installment sale, and that's great. You say, well, you've been using it for 25 years. It's based upon a 9-year-old tax law. Question number 3, I would encourage you to ask and to focus on is, how many of these have been tested by the IRS? And I think this might be the most important question, right? Because you want a strategy that's been tested, it's been through the fire, and any of the inconsistencies or anything that's illegal has been come up. And now, there's been thousands of closes, billions under management, and of those, it actually has a very low audit rate. There's been about a dozen no change IRS audits. No change, no findings. In addition to that, there's been an additional 3 formal audits, not on a particular case, but on the entire structure. As well, it has a private letter ruling that on form and substance has been approved on the transaction itself. Now, there's been also dozens of national law firms. There's been a lot of eyes and ears looking at this. We work with large banks. We work with qualified intermediaries. We work with major CPA firms to offer this strategy for their clients and in conjunction with them. So a lot of eyes and ears on that. But one of the best stories I know for this that helps me give confidence, and there's the evidence-based logical piece of this, and there's the emotional confidence. And this is a gentleman named David Young. And you may not have heard. You may not have heard of David Young, but David Young was a business partner and a colleague of a gentleman named Bill Gross. Now, these two gentlemen and a couple others were kind of the leaders to help build up a company called PIMCO. And PIMCO is one of the largest kind of money managers in the world, managing funds for some of the largest wealth in the world. And about 20 years ago, they all got together and they built it up, and they really helped it to succeed as one of the top in the industry. I like to say that Bill Gross, for those who don't know him, he's sort of like a Mark Cuban, or he's sort of like perhaps even like a Warren Buffett when it comes to being very respected in his niche industry of financial advising. So you can imagine that David Young and his team, they get approached with a lot of people trying to sell them a lot of things, right? And like David said on a recent podcast, which you can go to capitalgainstaxsolutions.com, and you can search on our YouTube channel as well, search on our YouTube channel, David Young. You can watch his entire story about how he overcame the false beliefs with the deferred sales trust. But long story short, he looks at this deferred sales trust about 3.5 years ago, and he looks at it for about 2 years, okay? He does a 2-year due diligence period. He is very cautious and deliberate to do the due diligence, has legal teams come in, he reviews it, talks with banks, talks with clients, talks and goes through all of this. And he came through with 2 conclusions after 2 years. And this is the first one. One, the DST tax attorney, it's the smartest person he had met, especially when it became to tax. And number 2, that they were all in. They were going to be a part of the DST advisory team to offer financial advising services for clients should they want to choose to use them. And so that is really pretty amazing. And I always encourage people to say, if it's good enough for David Young and his legal team for after 2 years of due diligence, being some of the most respected financial advisors or money managers in the world for like a 20 plus year time period, is it good enough for you, right? And your legal team, right? And that's where we want to encourage you to speak with David, with myself, to go through all of this in detail so that you can feel confident about the deferred sales trust. So that's kind of like question 3 or 4 there, is hearing and being a part of that story, and understanding his level of due diligence, and then being able to say, okay, someone else from the outside has looked at this. They're a part of it now. I feel really good about it, okay? So then the next question would be, okay, well, great. So it's legal. I'm feeling good about it. I'm feeling confident. But what happens if I get audited, right? Which you want to ask. This next question is, hey, is there audit defense? Is there, state and federal? What does that look like? And the good thing with the deferred sales trust, it's 100% audit defense built in, and it's 100% track record, which means there's been no change in all of those audits. In fact, the largest deal was a deal in California, in San Diego, a commercial real estate property, and that property was for over $100 million, and that was audited, and that would pass with no changes, no findings. And that's really remarkable if you think about it, because if you or I were to get audited on our tax returns, there might be a receipt we forgot, there might be an expense that was off, and there'd probably be a change. But in the track record of the deferred sales trust, it's batting 1,000, and it's perfect so far over 25 years. Okay, so step number 2, the number one thing you should be focusing on after step number 1 is the legality, and getting behind the confidence, getting confidence in the legality, and getting behind the track record and really understanding that. So that is step number 2. I want to intro step number 3 and also invite you to join our mastermind that happens every Friday at 10 a.m. Pacific Standard Time. You can go to capitalgainstaxsolutions.com and you can register right now for that. Totally free. 10 a.m. PST, 1 p.m. Eastern Standard Time, where we're going to spend time kind of like in a classroom setting. We're talking all things cryptocurrency, the deferred sales trust, investment real estate, and traditional investments. All so you can make great decisions, which leads into my next video, which is step 3. The number one thing you should be focusing on is investments. Okay, so investments, and we're going to talk about what investments can be made with the deferred sales trust, how they're made, how the funds flow. And so look for that video coming up right now. In the meantime, go to capitalgainstaxsolutions.com, register for our mastermind, and continue building your confidence in the deferred sales trust. Thanks so much for watching this video, and I look forward to talking to you